Good morning, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. Basically, we're going to talk about the overall markets, see what's happening with the geopolitical, economic data, how that's impacting the overall markets, and then we'll wrap it up with talking about some option strategies we can throw on to take advantage of our directional assumptions that we come up with. All right, so without further ado, let's get on with the economic data, see what's going on here with the markets. Well, yesterday we talked about this. It was coming to fruition. Well, Russia invaded, Ukraine invaded. Yeah, they're kind of breaking over the border a little bit, just trying to show a bit of face there. We talked about this before the Olympics even started. Russia, China, they showed that they were a group, or as one. They were kind of in this together. We've seen them do their military operations before the Olympics, but right at the Olympics, the start of it, they said that they stood together. Then throughout the Olympics, we saw this tension building on the Ukraine border. And I talked about it. There's no way that Russia is going to invade during the Olympics in China. Would not happen. Didn't happen. As soon as though the Olympics closing ceremonies, we saw Russia start to cross the border. Well, that sent the markets in a spiral down, sent crude oil selling off, gold spiking up into the 1900s. All of those things are the levers and pulleys we would expect. Interest rates started to subside a little bit. We were seeing some massive increases in interest rates on the 10-year long bonds. And now with this tension going on, that possibility of a rate increase is starting to subside a little bit. Why though? Why is that rate kind of getting pushed off? Well, because it would slow the economy here. We can see that they're already talking about shutting down the German pipeline there. That's the oil. They're going to slow down on that. They don't want anybody kind of blowing that thing up, I guess, during this tension. So they've stopped building the pipeline there. That's going to give oil prices some positive momentum there. That's going to give them a little bit of buoyancy here. Let's just take a look at it. We can see the reaction in the markets right now. We saw crude oil start to sell off at the beginning of all of this. Then everybody said, hey, supply is going to be an issue if Russia is going to be invading Ukraine. So now we're starting to get a little lift here as supply would weaken and possibly demand increase there. You know, surprisingly, bonds starting to kind of absorb all of this and starting to say, hey, you know, despite the fact that this is happening, the economies are starting to move. We've got inflation. I think that we're going to see some of this inflation subside a little bit. As a matter of fact, we're seeing 0% financing start to show up on a lot of automobiles and even heavy equipment, stuff like that. So these dealers are trying to move inventory that they have very little of already just to try and make sales. So they're giving incentives. Now, once that starts to, we see these cars start to show up and they have more inventory, I think that folks are going to get used to the thought, hey, I got 0% financing or at least a big rebate on this vehicle. So they're going to be accustomed to those types of things and wanting that even when they start to see that they have more of a choice there. But bonds settling down there. Gold, like we said, back into the 1900s right now. I think we'll probably see it continue on this trajectory and look to test that 1923 high that we made back in, I think, 2010, 2011. So that is the high watermark there. Haven't come and hit it yet, but it's pretty darn close as of now. We can see the momentum starting to slow a little bit there. Bitcoin, a bit surprising here with all this turmoil that folks aren't really throwing some money towards Bitcoin. I thought that we would see more of not necessarily a sector rotation because I think that they're two different investors, but the Bitcoin folks, I think, would start to put money to work rather than going and buying meme stocks or something like that. Those folks would start to look to buy some of what they see as more of a retainer of value there. And we can see the Dow Jones after yesterday's sell-off. This is yesterday and today put together during the day session, the open markets going on, overnight session, I should say, finding a little bit of support here. And now that the tensions have kind of ebbed a little bit, I think that we're going to see ourselves stay within these two areas, right within the point of control and the value area low. I don't necessarily see us breaking out too far to see a panic. I think that most of the market has digested the information that we're going to see higher interest rates. So that panic or the tantrum is pretty much over, I would say at this point. It's more about finding value in the markets. And we can see that the many S&Ps, we talked about this, they are ones that probably had a bit of a lag to the upside, and we're going to lag to the downside on any type of sell-off, where the NASDAQ was going to start to see some of that exacerbated moves. And then we can move over to the mini S&Ps. You can see this is when we started talking about Russia invading, or at least crossing the border and starting to stir the pot up over there. And now everybody's kind of starting to say, hey, you know, this could be just a bit of a finger pointing, or just to try and poke the bear and see what's going to happen with Biden and if they're going to react at all. One of the things that was expected here was that the tensions causing this pipeline to shut down, that we would come in and start to really knock back the pipeline as much as we did in the very beginning. Remember, we shut down our pipeline building here and said, okay, yeah, you guys are good with your pipeline, which was a little bit bizarre. Now, folks, at least the Republicans are trying to push Biden to start putting a little pressure on, or at least backing away from the pipeline there in Europe. And that's about it, folks. That's all we've got going on. It's really going to be a wait and see game, see how Russia reacts, see what China says. Now, China is in Russia's back pocket, if you will, or their buddy, if you will. And so China is going to give them a little bit of leeway here, folks. But I think that China is also worried about global growth, right? We've just come out of this pandemic. They've been hurt worse with the manufacturing, trying to get product off of their docks into the United States. Well, we've seen all that shipping congestion. Now that starts to ebb a little bit, they start to move product. They can start getting their economy back on its feet. Well, if Russia starts throwing a wrench in the cogs, I guess, kind of locking up that's probably going to be something where China has a little chat with Putin. That's all I got for you, folks, other than if you can't take that, take it easy. Hello, Doki.